Hi, my name is Toxie and I'm the president of Evergreen Anchor Capital. Today we're continuing our video series titled My Not So Crazy Mortgage, aimed at helping you get prepared before you apply for your next mortgage. The more prepared you are, the better options you'll get, the better interest rates, and the better experience. Today we'll be answering the question, do I have to have a job before I can apply for a mortgage? So, do you have to have a job in order to get a mortgage? The simple answer is no, you don't. But there's a caveat to that. You don't have to have a job, but you do have to have some form of income. So, walk it through with me here. The bank is going to loan you a considerable amount of money, usually, to purchase your home. They want to be able to see that you're going to be able to pay this loan back over the next few years. 30 years is typically the mortgage length. It could be shorter than that, but they want to make sure that you'll be able to pay the loan back. In fact, current regulations actually require the loan officer you're working with or the bank that you're working with, the mortgage bank, to show that they have adequately done enough. They've really looked into your financial situation to be sure that you can pay the loan back for at least the next 2 years. So basically, the bank is being asked to look into the future and to show that that you can make your payments over the next 2 years. Now that's tough to do because things change, and the only way a bank can look into what you're doing over the next 2 years is to look into what you did over the past 2 years, and with the assumption that whatever you did over the last 2 years, you will continue doing for the foreseeable future. So let's break down income, because like I said, you do not have to have a job, but you do have to have some form of income. There are typically two types of income that we look at. In a broad sense of it, we look at two types of income. The first is just your regular salaried job. It's a 9 to 5, you're employed by a company, you get paid weekly, bi-weekly, monthly, whatever the case may be. You get a W-2 at the end of the year. The company holds your taxes. They have withholdings on your taxes for you and things like that. That's generally classified as a W-2, salary job. So that's one form of income that we look at. It's stable. Banks look for you to have been working for 2 years. It doesn't have to be 2 years with the same company. They just want to see overall that you've been working consistently for 2 years, or more. If there are some gaps in there, maybe, we just have to write a letter to explain what those gaps were. There are different reasons why people have gaps. They're switching from one job to another. They're relocating from one city to another. There are different reasons why there are gaps in employment, and all those can just be written and explained. The second type of income is self-employment income. This is for people who own their own business, or income from real estate, or for basically, the way I like to explain it to folks is anything that is typically under your control, where you can decide today you want to do it or you don't want to do it. And so that's why there's some W-2 jobs that actually fall under that category, because there's some folks, like we've done loans for lots of people in the health IT industry, where they work for different companies as consultants. They get sent out to work with this hospital or that hospital, different contracts, and they pick and choose. Now they do get a W-2 from these different agencies at the end of the year, but they have their own choice on whether or not they want to work this month or not work this month. So that is still classified as self-employed income. And for anyone that's self-employed who doesn't receive a regular paycheck bi-weekly, weekly or monthly as the W-2 employee, the only way to be able to ascertain your income and how much you make is to look at your tax returns. And that's why sometimes you'll wonder, why do they ask for a tax return for some folks and not for others? Well, it's because usually for self-employed people, or a self-employed form of income, it requires us the only way to be able to check and see what you truly made was what you put on your tax returns. So your tax returns will show how much you made that year, what your expenses were, and then what is left over for your discretionary spending, which of course you can use to pay your mortgage. And we'll go through, we'll have another topic, another video that we'll do on tax returns and what we look at, over there. So those are your general two types of income. Everything kind of falls under that. Can you combine both types of income? Absolutely. You can be a W-2 employee working for a company and have a side business. You could have real estate. You could have a side business that you're doing that brings in income. We just have to verify. We use W-2s to verify the W-2 employment. We use tax returns to verify the self-employed income or the side business that you're doing. Just note for either one, they are looked at separately in the sense that for the W-2 income, we want to see that you've been working for 2 years or more as a W-2 employee. And for the business income, we want to see that that also has been going on for 2 years. So we will look at them as separate entities. We'll identify your income for the self-employed income and we'll identify how much for the W-2 income as well, and then we'll add them together and combine those. Can you transition from one form of income to another? You absolutely can. If you're going from self-employed income to a W-2 job, if it's in the same line of work, that's really good because it can almost flow seamlessly. You're going from being self-employed, which is a little bit more risky than a W-2 job, or at least it's looked at that way. They look at it as you're going into something more stable. And so you may, even though you've not been in the W-2 job for up to 2 years, we can still classify that as moving forward. And at least here in our office, that is income that we can use. Now, if you're going the other way, that's a little bit harder. If you're going from, you've been working a W-2 job and then you go and become self-employed, because you've not been self-employed for 2 years, that's a little bit harder. There are some scenarios where we can actually use that, but most times we can't. There are other forms of income that folks have. There's actually a type of loan that we do called asset depletion. This is for those who have a lot of money saved up in the bank and they don't want to use everything on paying for a house for cash. They may not currently be working, but there's a calculation that we can do that shows, that they can make their mortgage payments over the next, couple of years and still have a lot left over that they can use. Now, of course, that if you have that much money in the bank to be able to do that, you have a lot of options available to you, but it is something that we can do on another type of income calculation. What about working 2 jobs? Yes, you can use the income from 2 jobs. You just need to have been working at both jobs simultaneously for 2 years, or at least working 2 jobs simultaneously for 2 years. And what I mean is, at any point in time, for the previous 2 years, you need to have been working 2 jobs at the same time. Don't have to be the same jobs. You could have changed one here or there, but you need to show that you've been doing that for 2 years. Because again, what you've been doing for the past 2 years, you'll be able to do for the next 2 years, and that is the assumption. So to summarize, we've answered the question on whether or not you need to have a job before you can get a mortgage. Again, the simple answer is no, but you do need to have some form of income. And we've talked about the 2 different types of income and what the bank is looking at in terms, or looking for in terms of length of time at these types of income. Even if you fall slightly outside some of the things that I described here today, bring it to the attention of your broker, your loan officer, your bank. They should be able to look at, even if you don't fall exactly in that box, there's still other ways that we can help qualify that income and get you a mortgage rate. Again, this series is all about helping you get the best mortgages out there with the best rates and again the best experience. So subscribe below. We got lots of other videos coming out to explain other topics there. And if you have any questions on anything we talked about today, please be sure to let us know so that we can explain that for you. But let's keep working and getting everything we need to get done to get that fantastic mortgage.